Now, we've been focused on what the consumer price inflation numbers could be out of the US, but CPI inflation here in India has risen to a 5-month high of 7.4% in September from 7% in August. This is the 9th straight month of retail inflation breaching the RBI's target band. Meanwhile, India's factory output, IIP, contracted by 0.8% in the month of August. Lata is here with what she's making of both these data points. Lata, hi, morning.
Well, it was always expected September inflation would be high, but 7.4 is about 10 basis points higher than the 7.3, which most of the respondents told us in the poll. The painful part is food. Food is 8.6% higher and pummeled by two of the most important elements in our food thali. Cereals and veggies. Cereals up nearly 10%, and vegetables close to 20%. So these are going to be painful, though part of it was expected. The worry is that the long withdrawal of monsoon, which we are witnessing, could make October inflation also high. So on the street, economists are moving from an expectation of 35 basis hike in December towards 50%. There's a slight upward bias to expectations of rate hikes. Core inflation is also high, 6.1% compared to 5.9% in the previous month, but that is on expected lines. The 9th month of CPI being above 6% is important because the given mandate to the MPC is that it should be between 2 and 6% for 3 quarters in a row. If they don't keep to that mandate, they have to write a letter explaining it. This could be an added pressure on the MPC and RBI. So a slightly more hawkish stance in December can't be ruled out. But all these are pale in terms of comparison to what is happening outside in the world, what happens to crude, what happens to US CPI. So the bond markets will react, but there are too many other factors to which they will react. A word on IIP, we normally don't give much importance to that number, but this is painfully bad. At minus 0.8, the expectations were between 1.8 and 2%. We knew that the core sector had done badly. Those numbers were with us. Did you see the consumer non-durables and consumer durables number? Consumer non-durables is 10% contraction. Ties in with the fact that all the FMCG companies told us that they have done mid-single digit and low single digit. Something's really going wrong at the bottom of the pyramid. That's the message. Even July's IIP has been pulled down by 20 basis. Actually, yesterday's data is a bit more worry on growth rather than on inflation.
Oh, absolutely. Lata, thanks very much for that. I mean, it's not a strange situation, but it is interesting.
Yeah, it's not a dire, but a little worse than expected.
And this is happening at a time, as you pointed out, this is bottom of the pyramid, right? There are 3 legs to the economy: the government sector, corporate sector, and retail. Government is doing just fine, tax collections, etc. You've got the corporate sector, which has never seen healthier balance sheets, but the retail segment, the consumer, especially at the bottom of the pyramid, as Lata pointed out, there is unmistakably, there is a bit of a slowdown, as managements have also highlighted. Thanks very much for that. We'll take a very quick break here. We'll come back. Aditya Suresh, Head of India Research and Strategy at Macquarie, will join in to take some questions. We are back with that conversation